We have another question right here. Yes, please.
Hello, my name is Mahesh, and firstly I'd like to thank the panel for the very informative discussion today. I've learned a lot today. My question is relating to investment or commercial properties. Firstly, do you see any correlation between interest rates and rental values on, say, multifamilies and other commercial leases? And what sort of a relation do you see? Related to that also, do you see commercial property coming out of the trough that it has been? If you could just answer that, I appreciate it.
To answer your first question, I don't see any correlation between interest rate and rental price. As far as the commercial market on a whole, we've got a couple of factors here. Obviously, vacancy rates are up. That's what's going to impact the rent the most, is how much vacancy there is will dictate how much the owner is willing to lower the rent. When it comes to the market and financing, we're about to see, I don't have the exact number, so I'm not going to say it, but a huge amount of debt that's going to reset. The rates are going to reset. And that could have an impact as well as to the amount of commercial property that's for sale. So the commercial market is a little bit behind where the residential market is right now. But there are some tremendous opportunities out there. It's just going to be a matter of being able to find financing for the commercial end of the business.
I just might add that last week I met with a number of the members of my external board. I'm a dean of the School of Public Policy at Northeastern, and I met with 5 of them, all of whom are commercial developers: Robert Beal, Kirk Sykes, Young Park. And what they were telling me is they now are seeing the commercial market follow the housing market, both because you've gone through a very tough time in the commercial market and people are starting to see some positive gain there. The economy is coming back, and of course the most important thing for the commercial market is how's business doing? Sure. And business is picking up here. I think one of the things we have to be very careful about is what news you watch. You should be looking at WBZ, not at NBC. And the reason for that, it's the big honorarium you gave us to be here. The reason for that is that if you look at the markets, no time can I remember in my professional career where markets have varied so much across the country. I mean, if you go out to Las Vegas, you go to Florida, you go to parts of Arizona, they're still in deep trouble. They've still got mammoth foreclosures. They've still got auction sales going everywhere. And as you said, people aren't moving there in anywhere near as fast. Florida actually lost population last year. Lost population. So that if you look at the national news, you'll think things are still a disaster. Massachusetts is doing just much, much better. We have a lot of good investment strategies going. Last week I was with the governor and the lieutenant governor and the cabinet with a whole group of CEOs of manufacturing firms. Half of them right there said this year they're adding more employment, and the other half said there was a good chance they will. Mm-hmm. That's the kind of thing that's going to bring the commercial market back.
Kerry, we have a question. Yes.
Good morning. Rick Bowden. I actually am a mortgage broker, and I appreciate all the positive news I've heard so far this morning. I'm curious if any of the panel members...
We didn't talk about the last Celtics game, so...
Well, let's not go there. Not yet, not yet, yes.
I already figured out why Florida's decreased in population. It has to do with 176-degree weather. And heaven's got a waiting room. The amount of inventory that is supposedly being held by, say, the Wells Fargos, the Citibanks, the B of A's, real estate owned, short sales, foreclosures, et cetera. I'd like someone to address, or all of you address, the issue of how it might prolong the downturn in terms of values and being able to get appraisals done at more market favorable prices so that the lending industry will percolate a little more.
I first want to react to that I hear that appraisals, when you're about to either refinance or to buy a home, appraisals are very difficult because the market has been so slow. And the banks are tightening up, so you have to find comps that are in the last couple of weeks. And sometimes they're just not available. So tell us about that.
Well, Rick, I'm glad that you asked the question, and let me tell the group the group that if you're looking to get a mortgage, for the most part you can. Again, be careful who you listen to on the news. A lot of lenders have money that they want to get into the market, because if they don't lend, they don't make profits. So yes, they're going back to some basics, making sure you have a down payment and a credit score, and they can actually document both of those. But as far as the inventory and appraisals, last year appraisals were more of an issue. The government, in reaction to the financial crisis, instituted the HVAC, which controlled how appraisals were done. We're getting more sales, some better comps, so the appraisal end of it is happening. And then as far as your bank-owned properties, let me just say this, and I'm doing this. When the banks own the property, it creates opportunities. It allows folks to get back into the market at more affordable prices. So long as they don't glut the market with that type of inventory, we should be able to navigate through it over the next few years. And I'm encouraged by what Barry's saying, that he thinks that we'll be back up to our 2004, 2005 prices in the next 3 to 4 years. So that's my take on it.
I wanted to ask John a question as a first-time home buyer, John. What was your biggest surprise in the whole process?
My biggest
surprise.
Ooh.
Or shock, like, my God, that fee as well, or whatever it was?
I think it was when we first started. You know, you try to crunch the numbers and how much can we afford, and I think we came up with a number of, okay, well, we're in the $400,000 range, and I'm not from this area, so I thought we'd be able to get something pretty decent, and that was the real eye-opener, is that it's not really a lot for this market. So yeah, and I come from San Francisco, where prices are very expensive.
So. Now, you came from San Francisco, which is the most expensive real estate metro in the country, to Boston, which is number 2. So they're pretty close.
I want to throw out another question.
Sure.
We had talked about underwater mortgages, and you're seeing mainstream articles now about people walking away from their mortgage, and I believe it's called strategic defaulting. I wanted to ask the panelists, what does that say about the market?
Do you have any experience with that?
Only anecdotally. I haven't had any clients that have walked away. What impact is it having? It's just putting another empty house in the neighborhoods, in the community, and at some point the banks foreclose, they take it back, or it's a deed in lieu of foreclosure, and they have to get it through their pipeline, get it listed, and get it out in the market.
I've heard stories of these people walking away from their mortgages, but mostly in other areas of the country, not here in the Metro Boston area.
You know, if you think of it as just pure strategy, strategic default may work where you have a real deflationary cycle, where you can get out of your mortgage and then buy something new if you have some cash to do it. You're going to have trouble doing it because you don't have a credit rating anymore. But when you have a stabilized market, there's no percentage in doing that, so we're not going to see much of that here. I did want to talk about, John, the $400,000. I told you I was in Detroit the other day.
Yes.
I actually ran into an old friend of mine I graduated from high school with, who's a realtor. And I was asking about real estate prices in Detroit and the suburbs, and I said, if I were to move, and I used that price, I said, and I wanted to buy a home for $400,000, what could you sell me? He said, absolutely nothing. And then he paused and he said, the Northwest Side. The whole Northwest Side.
All the Northwest Side, yes. We have a question in the back. Yes, please.
Yes, Cherise Sebastian. My question is, since 40B has so much intrinsic value, why the attempt to repeal it?
I think this goes back to the original colonies and Massachusetts Bay Colony. I think there is in Massachusetts. I'm from Brooklyn, New York, and then I grew up in Detroit, and I've been here for 40 years, and I sometimes still think I'm a foreigner. There is this idea that the local community is sacred, and that we have to fight for everything we have at the local community, and anytime the big bad state, capital S, comes in and tells us that we can't do something, we get our back up. And so there are a lot of folks who really haven't thought about this as a housing market issue at all. They've just thought about it as, the state telling us what to do. And therefore they're angry and they're going to try and repeal the thing. What I would hope they would do is think about their rational self-interest, and that if you don't have the kind of affordable housing stock, particularly for young people, to keep them here, to have them move here, ultimately they're going to lose value in their homes because they'll, at some point, other communities attract those people away, the demand isn't there, and we begin to look a little bit more like Detroit than the community we'd like to be.
If you could show hands, and we'll get a microphone to you. Have a micro. Okay, we have, yes.
My name is Dan, and what is it that buyers are looking for today? Is it just value and price, or is there more?
The psyche of buyers is very complex. What I'm seeing is buyers are looking for a place to put down their roots. They're looking for their piece of America, and they're looking for a place to raise their kids. But I've worked with a whole lot of first-time home buyers in the past year and a half, so maybe Tony can answer that on a different level.
Well, I think that starts with lifestyle, that people are, whether they're with kids or without, and one of the big changes in the marketplace is that substantially over half the households do not have children, so that's the majority of home sales, not the minority of home sales, and that's a big change that's occurred really in this last decade. And that those folks are looking for a place to make that lifestyle so they can do all the things that they've always wanted to do. Particularly during the time frame when you're raising kids, that's what your main responsibility is. When that responsibility is over, whether you love walking or golf or hiking or whatever it is that floats your boat, you want to be able to do those things, and you want them to be close to your home, and you want to have all those choices. And it's really, I think it's that kind of lifestyle-driven decision that's as important as the house itself, maybe more important than the house itself.